This is Lake County Board Member Dick Barr. This is the first in a series of videos I'll be producing to educate taxpayers on their property tax bills, property taxes in general, property tax exemptions, and on what you, the taxpayers, can do to effectively take advantage of opportunities to lower your property tax burden. Since county government represents only about 7% of your property tax bill, I feel it is part of my duty to educate you on your bill and help you find ways to lower your overall tax burden. In this video, we'll spend most of our time focusing on how your bill is calculated and how to identify which property tax exemptions you qualify for. Here is a sample copy of your property tax bill. It is broken down into 5 major components. The first 2 components are your spring and fall payment coupons. You will get these even if your mortgage company escrows for your taxes. It is always a good idea to confirm with the Treasurer's Office to make sure your mortgage lender did in fact pay your property taxes. If they missed a payment or made a late payment, you would be responsible for a 1.5% per month late fee owed to the Treasurer. The third component contains some very basic assessment information that identifies the property. This includes the parcel identification number, tax year, tax code, lot size, address, and legal description of your property. The legal description is the technical legal address of your property. The fourth component is a list of all the taxing districts that you belong to. This is where you find out how your tax dollars are distributed. We will go deeper into this section and exactly what it means on a future video. Now, the fifth and last part of your tax bill. This is where I want to focus today. This is the section where you can have the greatest effect of potentially lowering your tax bill. This is where the assessors determine what portion of the property tax burden you're responsible for. All of the other components of your tax bill are simply factual information there for the sake of transparency. This last section is where the sausage is made. This is where you'll understand how your home's value affects your tax bill, and also how by adding qualifying exemptions you can pay less. Now, as we zoom in on this fifth section of your tax bill, we're going to break it down even further. Section 5 can be broken down into 6 distinct sections. The first section deals with your home's market value, priority exemptions, and your equalized value. I've chosen a home with a fair market value of $250,000. State law requires that your assessed value is equal to your fair market value times 33.33%. On your bill, that equalized value is broken down into 2 components, your land assessed value and your building assessed value. You'll notice when you add those 2 up, they equal the same as the EAV above. The state allows you to take 2 exemptions prior to them applying their multiplier: the home improvement exemption and the disabled veteran homestead exemption. You do not need to apply for the home improvement exemption. It is applied automatically. Your local assessor reviews building permits for work completed. They will make a determination if the work performed will add value to your home. If so, they will increase the assessment of your home and automatically apply the exemption for 4 years. The Veterans Homestead Exemption listed here applies to the Adaptive Housing Veterans Homestead Exemption. This is for construction done and paid for by the federal government for a disabled veteran that accommodates their service-related disability. Please contact the Illinois Department of Veterans Affairs for more information on this program. Now the bill adds the land assessed value and building assessed value, then subtracts the home improvement and disabled vet exemptions. That sum is multiplied by the state multiplier, which is currently set to 1. And this brings us to your property's equalized value. The next section takes your equalized value and builds on it by adding value for farmland and farm buildings, which are assessed at 1/3 of the economic value to the farm, as well as add-ons for polluters and railroads. Equalized value plus farm-related assessments, plus assessments for polluters and railroads equals your total assessed value. This next section is where the majority of your exemptions will be found. Starting with your total assessed value, we subtract the following exemptions. For all of these exemptions to be eligible, you need to own the property that you occupy, you must be a taxpayer of record, and it must be your primary residence. General Homestead Exemption. This is the most common exemption available to most homeowners. This exemption lowers your total assessed value by $6,000. You qualify for this exemption by simply occupying the home as your primary residence. You should apply for this exemption immediately after purchasing your home, and there is no need to renew annually. This exemption will stay on as long as you own and occupy the home. You should notify the assessor's office immediately if you cease occupying this home as your primary residence. Otherwise, in the future, you could be forced to pay back any exemption you received that you were not eligible for. To be eligible for the Senior Citizen Homestead Exemption, your home must have been your primary residence on or before January 1st of the tax year, and you must have reached age 65 during the tax year. This exemption lowers the assessed value of your home by $5,000. There is no income requirement. You do need to apply. However, there is no annual renewal requirement. The Senior Citizen Freeze Exemption freezes the taxable assessed value on your property to the day that you qualify. It, however, does not freeze the tax amount, only the value that is used to calculate your tax. Total household income must be $65,000 or less, and this exemption must be renewed annually. The Returning Veterans Homestead Exemption lowers the assessed value of your property by $5,000 for 2 consecutive years after return from active duty in an armed conflict. The disability exemption applies to civilians and veterans alike. It lowers your assessed value by $2,000, and you must be disabled under the Federal Social Security Act. This exemption must be renewed annually. The Disabled Veterans Exemption applies to your principal residence on or before January 1st of the tax year. Your disability must be service-connected. For disabilities greater than 70%, you are tax exempt. For disabilities between 50 and 70%, your assessment is lowered by $5,000. For disabilities between 30 and 50%, your assessed value is lowered by $2,500. This exemption must be renewed annually. The natural disaster exemption applies if your home had to be rebuilt as a result of a natural disaster. The exemption exempts the difference in value between the newly built structure and the old value. The exemption applies until the home is sold or transferred. Now, once we subtract all of our homestead exemptions from our total assessed value, we arrived at our taxable valuation. The next part in the process is to take the calculated taxable valuation and apply your tax rate to arrive at your real estate tax due. The tax rate is obtained by adding up all of the tax rates for the respective taxing bodies on the left-hand side of your bill. Taxable valuation times tax rate equals real estate tax due. If you live in an area with an SSA or a drainage district, they will be represented in this next section on your bill. Now we can take the real estate tax calculated in the prior step and add the special service area and drainage district to come to your total current year tax. Finally, in this last section, we take your total current year tax and add any amounts accrued from previous years. This includes any taxes omitted from prior years, any recaptures of taxes previously forfeited, any interest on past due taxes, costs accrued, as well as a reflection of payments already received to arrive at your total amount due. That about covers it. If you have any further questions regarding your tax bill, please contact the Lake County Treasurer's Office. If you have questions about your assessments or exemptions, please contact the Lake County Chief County Assessor's Office. Or if you have general questions, please feel free to reach out to me via email at dbarr@lakecountyil.gov.